16 January 2023, Monday, MAO with Kel. Two main topics. Yellen gave stern warning and things is getting pretty bad as the US national debt clock is trading at, basically doing at $31.4 trillion. And it's going to hit the ceiling very, very soon. And that's why Yellen is really giving a stern warning to the market. But the Wall Street doesn't care. And BOJ, I've been telling you guys about this, the recent movement on the 10-year yield has crept past 0.5% again. This is the second time within 10 trading days. In fact, third time, if put it this way. So this is not good because it's really give me the same vibes that what happened back in 1992, whereby George Soros was attacking the pound due to the ERM mechanism. So if this is going to break, and if really BOJ has been forced to increase interest rate out of nowhere, I can tell you this, a black swan event is going to really erupt. So all this information you really need to watch, and let's go to it right now. Now, make sure that you do your risk assessment because anything is possible. And of course, thank you AIMS for the kind sponsorship. Now, first of all, let's ask you a question. Do you feel hot these 2 days? Now, there's a reason why I want to say this, because if you actually follow my MAO videos since many years ago until now, whenever we talk about the sun itself, right, it talk about the solar flares, and it seems to have a very incredible relationship to the stock market. So if you are interested in this, just key the keyword, the sun, solar flares, and stock market. I can tell you this, you'll find something very interesting. But of course, this is no direct science relationship. You just go and do a Google search and you will know what I'm trying to say. So if things really happen, then I'll come back to this. Alright, let's recap what happened on last Friday. Okay, first of all, the Dow Jones again up by 112 points, Nasdaq 81, S&P by 15 points. So, wow, again, the S&P is very near to the 4,000 mark that I've been saying. 3996 was the level that I mentioned. So, is it a time to buy? Well, you look at Amazon, look at Apple, it looks pretty good. JP Morgan was up by 2%. And of course, the bank all did pretty well. But when I show you the chart, right, you'll be very stunned with the way it looks like. So first of all, we understand the Dow is up by 100 points and the Nasdaq notched the best week since last November. And the main thing is that the bank earnings weigh on equity first, but for interesting stuff, it managed to recover and close at the high. So all this tells you that even though the earnings are not good or not fantastic, but as long as the funds are available, buying is not a problem. But interestingly, most of the bank CEO like Citigroup and Bank of America both are anticipating a mild recession. What is a mild recession? I mean, recession is recession, right? What is mild? What is hard? Sometimes I just don't understand. But never mind. So we have people now telling you Bitcoin is time to buy. Well, Bitcoin recovered to 20,000 a couple of days ago. And now people are saying that it will go to 50,000, 100,000. Okay. Now, honestly, if the timeline is 2 to 3 years, I can tell you I buy that. 100,000, I don't know. 50,000, high chance. Okay. The thing is this, you can see right now, everybody is now looking at this potential upside on Bitcoin. So I want to show you, excuse me, on Bitcoin. Let's take a look on Bitcoin right now. Now, the one in candlestick is Bitcoin. Yeah? The one in blue is actually the S&P 500. Okay, so let's take a look here, guys. Seemingly, whenever the Bitcoin is at its peak, you can see the S&P will be at its peak in each cycle. And if Bitcoin starts to fall, the S&P follow. Interesting. And over here itself, oh my God, look at it. The peak of Bitcoin and S&P was really identical. So when the Bitcoin goes down, S&P also went down. Very interesting. So of course, like not exactly will be that almost, but the main direction is always the same. Yeah. Okay. So now what we saw is that the Bitcoin is going up and S&P is going up. So all I can say is based on the Bitcoin chart right now, we are very overbought. So if Bitcoin fell, okay, if Bitcoin is to fall, then most likely the S&P 500 will follow through. So that's why I tell people this, watch the market closely because you really want to know what to expect from the S&P 500. So that's why last night with all my students, I tell them to watch out for the Bitcoin very, very closely, okay? All right. So, of course, the next thing is that finally we get to see a report from China telling you about the huge rise in COVID deaths after WHO criticized Beijing for the heavily undercounting. Now, finally, China tell you they have about 60,000 people with COVID and they died in the hospital. So, you see, guys, 2 weeks ago when I was covering this, some of you guys wrote in the comment box and said that, hey, I'm spreading nonsense, I'm basically a fear monger and stuff like that. But now you take a look, and I tell you this, if China can tell you it's 60,000 deaths, I can tell you add a zero or another zero behind, I don't think it'll be too far away. Now, this is what we have been seeing out loud, right? Because we know millions of people in China got infected with the virus, but you can see now a health official in government news conference says the only deaths caused by pneumonia and respiratory failure after contracting COVID will be classified as COVID's death. Heart attack and cardiovascular disease caused by the death of infected people would not get that classification. But we all know that a lot of people who got COVID and it happened to be they have heart issues, they usually get themselves in a very, very dangerous position. So of course, if you do this type of division, then I can be sure the numbers will be high, even though there is a sharp rise in several severe cases among the older people, which we all know that. Alright, so all I can tell you this itself, right? China is still saying that, well, the people in the clinics, in hospitals are getting lesser. Well, of course, because they're now staying at home. But if you're telling me that there is a end, this is a peak, I don't buy that, honestly. Now, I have relatives in China. They did share with me that the number of people getting sick itself is like almost everyone, and people are recovering. That's a good thing. But still, the death itself is still mounting up. So take note of this thing here. Let me just clean up my screen a ball. Give me a moment. Right, despite the high infection, okay, air passenger volume in China has recovered to 63% of 2019 level. So a lot of people are traveling out of China. And the thing is that the passenger traffic volume has jumped to 99.5% during the festival migration, which is like people going back to their hometown. My goodness. So if so many people are going out of China or going inside, going around to visit their relatives, who probably are older people, what do you think will happen? And of course, even like the Chinese gambling hub of Macau, 46,000 daily inbound travelers, right? Oh my goodness. Ooh, I just cannot imagine if this thing, if the variant, if the virus go, the different variant, mutated to a different variant, I really cannot imagine this, guys. I just feel so bad on this right now. But again, let's move on. Now, this is a very incredible algorithm. Now, JP Morgan, we see the share price gap down, right? Because of the earnings. It was not as good, even though it was within consensus, but it's not as good as compared to last quarter. Yet, the stock itself rallied and closed at a high. What a BNB recovery, heavy volume. So, pretty cool, right? But are we near the overbought region? We are, but of course it's a pretty positive divergence, so we need to watch this closely. But incredible, you look at this right now on Wells Fargo, oh my god, heavy volume, open low, close high. Oh, so is this the start of a bull market? Well, by definition, it is a bull market if you look at it from that perspective. But again, if you look at even Bank of America, also did the same thing, high volume, gosh. Something is just not right. The market is actually going downwards, right? And the way the three of them, when after the earnings, all together, right, universally, they'll actually behave the same way. Open low, ended high, open low, ended high, open low, ended high. What does it tell you? I just feel so wrong here, guys. I'm not too sure how you view it, but just be careful, okay? But of course, Wharton professor Jeremy Segal says that, hey, no problem, US has resolved the inflation problem. Now, this guy was the guy who calls for the sell last year, and he was spot on. So now he's saying that US has managed to solve the inflation problem. Oh, okay. So based on what he's saying right now, they say that the CPI data shouldn't be taken at face value because this is the lagging data point and there should be more downside already for the housing stats and stuff like that. So he don't believe in this Fed President Neil saying that the bond market is trying to move optimistically. All right, all this is like he's rejecting it. In fact, he took aim on Jerome Powell, said that the labor market indicate a hot job market is not enough justification. So in short, it's all right. He seems to be the smartest guy on earth right now, and he's saying that nope, US has solved is inflation. I can tell you this, Mr. Jeremy Segal. When crude oil goes to $100, I would love to hear of you again, because that's something that I am pretty confident. So I'm not going to be a professor, but I just know that crude oil will $100. Why? Because this is a statistics and it's a pattern. So Bank of America strategy says that the US stock is set for a 10% drop before a later rally. This one I actually agree. So who was that? Michael Harnett, right? Michael Harnett and Mike Wilson, both of them were really the best strategists for last year. And now Michael Harnett says that, right, there's a chance of seeing a 10% to 3,006 before going up to 4,002. Well, I don't know about 4,002, but I do agree a 10 to 15% drop, as I've been saying for the longest of time. So, of course, the reason is that the outperform of European stock versus US was the start of the era, while Goldman Sachs here says that Chinese stock will rally more room to go, which I agree, but not now. So, based on this right now, it seems to be showing that the S&P 500 and the MSCI ACWI index out there is a bit of difference there. Hence, therefore, they feel that there could be a bit of pullback. Then, when the value comes in, it will be a buy. And do note that global stock funds have a 7.2 billion inflow through January 11, okay? And of course, there's still more redemption also coming out from US and Europe. So, what do you think? All right, I can only say that 10% to 15% drop is my personal target, yep. Okay, so now this is where it gets very interesting, and the main two highlights of today. Yellen warns US default risk by early June, urged debt limit hike. So again and again and again, every time they use up the money, they'll push the debt ceiling higher, because they know that if you didn't do, you have another government shutdown. So now Secretary Janet Yellen says that United States will hit $31.4 trillion statutory debt limit by Jan 19, I think already hit. So now she has to do something. So they need to take a certain extraordinary measure to prevent US from defaulting on its obligations. So the thing is, we all know that the department on Thursday, right, which is the Federal Reserve, this basically is reported an 85 billion December deficit as revenue eases and outlays grew, all right, in short itself, cost increases. So all these basically tells you that there must be something to be done, if not things will get bad. But we've seen this so many times, so I also don't want to say, but again, market loves such things. If the market starts to come off and Yellen is talking about this, the market will take advantage of this thing and then push the market down, and then it will give a lot of pressure, stress to the Congress, and then they will actually say, okay, let's increase the debt limit once again, right? So when the Republican was asking for it, the Democrats hated it and say no. Now Democrats in the House, they also say no. So what do you want? All right, so let's look at the US debt clock right now live, okay? You will see it for yourself. Oh my goodness, look at it. It's already $31.4 trillion, okay? And it's really beyond that. So we are going to hit 31.5 very soon. And look at it, the numbers is really running up at a very crazy pace, all right? US total debt itself is at 93, okay? This should be $93 billion, yeah? And of course, the interest per adult itself is at $13,000 US. Oh my goodness. And the even student debt itself, right, is going at $39,000. Oh gosh. And credit card debt is now $1 trillion. Yeah, I think so. All right, so all these adds up to the US debt clock, and that's why Yellen is really unhappy. And you can see from here itself, oops, a bit of technical issue. Just give me a short moment. Okay, here we go. All right, this is the Federal Reserve balance sheet. As you can see, the Federal Reserve did go down, did bring down some numbers, okay, but it's nowhere near fast enough. And this is what happened on the 4th January, and this report comes once a week. So the next one is how they only clear less than just $1 billion. So it's really nowhere near to what we consider as fast enough, okay? So if the Federal Reserve continue to do this itself, right, you can see that although the numbers is coming down, right, it's nowhere near. But do note, when it comes down long enough, that will usually cause the stock market to come off. And I already told you guys this. Once the Federal Reserve continue to do this, it will cripple the stock market. So I just kind of tell you that, right, Federal Reserve is reducing slowly. We all can see that very clearly, but they are still reducing. So there's no good reason why the fundamentals support a stock market rally. So that's why I need to be very careful. Now, the one that I'm really very concerned right now is the potential Black Swan event, and it may come from Bank of Japan. Because Bank of Japan yield curve control in danger as policy backfire. Alright, so this is coming from this Channel News Asia, so you should basically trust what is shared over here. Alright, so what's happening right now? Let's take a look. Okay, first of all, the investors are pushing up the Japanese government bond yield, testing the BOJ policy of yield curve control. The central bank last month shocked the market by raising its cap on a 10-year yield to 0.5. That is what happened, from 0.25, doubling the band it will permit above below its target of what, 0. So 0 was a target, and yet they lifted it to 0.5 right now. When this is happening, that means that they're allowing potential interest rate to be hiked. Now, if the bond market function continues to deteriorate ahead of BOJ policy meeting, which is getting nearer, the risk of an early end of the YCC, which is the yield curve control, could heighten, okay? This is no joke, alright guys? So, the BOJ, they hope that they could strategize an orderly unwinding of YCC under a new leader, because they're looking at changeover leader very soon. But we all know that this is not going to help if the market getting too edgy. Do note, less than a month ago, bond sellers broke the 0.5% yield cap on Friday, forcing BOJ into an emergency bond buying to bring the rate down. And they have been buying and buying and buying non-stop, but the numbers are showing the opposite direction. So this is not good. Let me show you the chart right now, and you can see why am I very concerned. Now, this is what happened, guys. This is the 10-year yield that's been all the way, at the maintaining flow of 0.25%. Now, of course, occasionally there was a break here itself, but then again, it got pulled back, right? But the thing is, on this particular day, which is like in December, the thing that shoot past 0.25 and went all the way up to 0.5. Oh gosh. Then they quickly used the bond to pressure back the yield down. But again, the buyers came in, went above, they pressure it down, went slightly above, went up again, now they are pressing again. So for the third time, they've been pressing down below the 0.5. But the thing is this, can they really control it? Because we all know that if this cannot be done long enough, the next up wave can go all the way up, and you don't want to see that type of thing happening. This is going to be getting very, very scary, because guys, the VIX itself is something that I'm going to go long heavily later today, because I think that it's a very, very decent bet right now to place on VIX. Now, either I'm going to buy at 18, then if it drops more, I may buy at 15, and that will give me a very good level to buy for long term, because I believe that this will spike up to 32 if, let's say, things really get ugly, and I'm kind of confident that this will. So guys, what do you think? Would you be buying into VIX? If you are doing that, it's out in the comment box, right? If that will give you one more chance to be part of the Lunch with Cal thingy, alright? So if you're going to buy VIX, let me know. Yep, okay? Alright guys, so let me just recap what happened on last Saturday. We have a very, very successful preview. About 70 to 80 people came online and they signed up for my class. This is the detail, right? But the price is no longer 188, it's 288 right now. And my class itself for February is 11 and 13 of February. So if you want to have more details of the class, you just have to understand that you just go to Facebook, Trade with the Boys Facebook page, and then put into the messenger box and leave us a comment. Now, during the class, I'll tell you how to use my KSI indicator and why when people are calling for sell in the market, right? On gold recently, we call for buy because our KSI was green. And when it's yellow meets green, it's always a good time to buy more. All right. So this is going to be shared with you during the class itself. Okay. All right. So go to Trade with the Boys. Go to there's a top right corner. Send message, right? Just click on it and then you post us what thing you want to ask us. We will come back to you ASAP. Okay. Guys, take note of all this great stuff. So let's look at the charts right now and see what we have for you. Oh gosh, okay, let's take a look right now. Okay, first of all, let's look at the market here. We have the Hang Seng. Okay, let's do the one by one first. The Dow Jones. The Dow Jones today has now broke below 34,038 level. So this is not a good sign, but we all know that 34,392 is a BNB extension. Today's high is 34,388. It missed by 4 points. Well, the thing is this now is trading below pivot 2 is not a good sign. So traders need to be very, very careful for this. Yeah. Okay, take note of that. And also at the same time right now, give me a moment. Okay, so what happened is that if the Dow Jones, it has to stay above 34,245 to find strength. This is a very important MLP level for today. If the Dow Jones can stay above this, the market being recovered. But if the market breaks below this, the selling wave can bring it down all the way to 33,535. Upside wave, 34,442 could be the first target, if not 34,549. All right. For the Nasdaq, well, it has already breached the 11,500 extension level. Hence, therefore, this morning it gaps out, it's pulling back now, covering gap. KSI and KRW both are in a positive shape, so it's going to be tough to call unless that something happened in BOJ. So 11,484 MLP is something to watch out for. So as long as the market stays above this level, it should be fine. Okay. S&P 500, let's take a look right now. S&P 500 has just passed the BNB RL level for 1, 2, 3, 4. Now this is the 5th day and it seems to be resisted by the 4,005 KCB level. So watch out for 39.86. That's right. As long as the market can stay 89, sorry. As long as the market can stay above 39.89, the market should be okay. KSI and KRW both are kind of positive, not too bad. Although the KRW is kind of weak at the moment, but it's still positive. Yep. All right. So let's just look at the Hang Seng, as I mentioned to you earlier. Hang Seng now has have touched almost touched the 22,000 level. Then it pulls back now at 21,730. The BNB RL is 21,753. Now it's trading slightly below. If it stays below, then the first target will be coming down to BNB SL level, and that's 21,266. KSI is still green, but KRW is red, so there's a bit of mixture now. So traders just go slow on this, okay? All right, so we have all this. Now, China market is very interesting. China today blasts up all the way, but the resistance here itself, which is at about, let me hard to see. Let me just change the color a little bit easier for all of us. Right, 14,200 is a very strong resistance, and the RSI is indicating a bit of overbought. But the movement itself is very positive. It's a positive divergence. So if things goes, if it pulls back, it could be a time to look for buying again. Support level stays at 13,740 level. Yep. Okay, let's continue over this side here, and let's look at the crude oil market. Crude oil has continued to go up. Yes, on Friday, today high was $80.17. Now it's pulling back down and touching MLP at $79.17. But what I don't like is that the KSI is red in color while KRW is blue in color, cyan. So when the market's going up and KSI is red, it's not a good sign. If the market breaks below $77, $78, right, there could be some selling all the way down to $76.90. Now to me, commodity should be on the way up, but based on the algorithm and my pattern, a pullback is kind of expected, and that's where you can use it as a form of time to watch this closely. All right, so this is the crude oil market. Let's look at the gold and silver. So this is the, let me just bring it in. Oops, sorry, not this one here. Here we go. This is the gold market. Gold market KCB is 1930 and the high was 1929, missed by the dollar, but it's also seemingly overbought. So because from the lowest point, the color changed from red to yellow until now, the market went up by almost $120. So a pullback is kind of expected. So 1908 will be the first support level, the MLP. And if it goes any lower, then the BNB RL level, which is at 1886, will be the next one. So I'm going to write it down and put it here for you, 1886, okay? All right, so that is gold. Let's look about silver. Let's take a look right now. Silver. Okay, for silver, it is climbing up. Now the BNB SL is here. Next day, it climbs up, breaks above the BNB RL level. Very smart trading here. So now silver is trading at 24.34. I suspect 24.36 will be touched and taken out by the market. So traders, you need to watch this very closely. Yep. Okay. All right. Give me a moment on this right now. So something on technical side. Well, as long as silver continue to go higher, we can see 24.65, if not 24.86. I'm still very positive on silver. But of course, again, if there's going to be any upthrust on the dollar itself, right, that will bring silver back down a little bit. And I'll show to you now the current situation now on the BOJ yield. You can see right live at it now. It's trading at slightly below the 0.5% mark, right? It's trading at 0.493 level, all right? And if you look carefully with the US dollar, let's take a look at the dollar right now. US dollar is seemingly finding some strength at this point here, which is that the 50% mark is 102.20. So now it's trading at 102.15, And if you look at it, expanded view is very, very close to our potential rebound because it's two dojis, and it's either going to be small selling, if not that is the end, and the market may stage a strong recovery on the US dollar. And I feel that, look at it right now, in terms of the RSI reading on it, well, we are very, very near for a potential midterm bottoming out. So traders, be very, very careful on this right now. Okay, so that is it. If you look at it with the US dollar, with the Japan dollar, this USD JPY, you can see that it really came down, hit the 127.62 mark, the extension. So likelihood we may see a small rebound in the near term. Yep. Okay, let's just continue with the gold and silver that is done. Then we will look at, oops, sorry, non-technical. Let's look at the Bitcoin and the Ethereum. Let's take a look. I think I forgot Ethereum again. My bad. Been pretty busy recently. So now Bitcoin has went up and it went to 21,443, but now it's pulled back below pivot 2. And usually if it goes pivot 1, sorry, my bad. But usually if it goes down further, you can see coming down. So 20912 is a very strong MLP, and you can see the market really, really utilized it. But if the market breaks below MLP for today, 19,815 will be next. All right, so traders need to be careful. Now, I cannot deny this. I'm very uncomfortable with what I see on the BOJ 10-year yield. So traders, you need to be very careful because you don't be caught for the sudden sell-off and it will hurt your financial portfolio. All right, this is Kel signing off. Have a great day. Leave a comment. Bye-bye.